Hello traders, Gary Wagner here, just about 10:15 in Honolulu, makes it 3:15 in New York. It is Monday, December 21st, 2015, and this is the Daily Report for Gold and Silver. After the nice showing that we saw on Friday, we absolutely have follow through today with gold trading up approximately the same amount as we saw on Friday, up roughly $13, $14. As you can see, we're just below 1080, 1079.81, so let's call it 1080. The high 1081.79, so we're just off the high with the low of 1064.09. When we look at our daily chart, and that's very important, what we see in terms of a candlestick pattern is that we had a piercing line form on Friday's activity. That would be these two candles right here. This would be your confirming candle. Now, the key is obviously as we go into the Christmas holiday weekend, I expect some volatility in the market due to a diminished volume. So I'm a little bit more hesitant to take a stance in the market right now. However, we did initiate a short position. We pulled out in profits. We got out, I believe, at around 61 the other day. Market now, $20 from that point. So it's something that we definitely want to take a look at. Also, I have a simple moving average. I'll let the charts come in once again, but I've got a simple moving average. That moving average is sitting at around 81, I believe, 1081. So we're just about to actually break above that particular moving average. Now, this is all obviously short-term studies, and the real question has got to be, what does that really amount to when we look at the bigger picture in the market? So traders, I want to look at our longer term picture through the eyes of a couple of different charts. And on this particular chart, we are looking at a monthly chart. So every candlestick represents a month. And the interesting thing is what we are getting now for the month, as you can see, it is a green candle. And so we are going to, it looks like, have the real distinct possibility of finishing on an up note. But this is also showing a pretty critical area in which we do have a Fibonacci harmonics. Now, this Fibonacci harmonics is combined with an extremely long-term Fib retracement from about 200 to 1900, the second one from 540 to 1900, 1084.48 and 1065. Those are the two numbers we get. Now, obviously, $20 apart. Why am I calling them a harmonics? Well, I am because when we consider the breadth of this particular study, and as you can see, I've really got to go back to about 2001. So the breadth of this study, which is almost a 15-year study, a $20 differential between these two prices to me is pretty much on target of being the same, because we're looking at such a huge price spread. So when we see a 50% retracement at 1084.61, at 1065, those I believe are harmonics in the market. So traders, in terms of other areas that we want to look at for potential resistance and to determine if we think this market has the ability to move higher, all I've done really is converted our monthly into a weekly chart so we could really take a better look at what we have seen over these last couple of weeks. And let's go ahead and blow that up. And here's what we do see. Let's go ahead and move that kind of to the center. But on a monthly chart, obviously, it's simply showing us a small green candle. But when we look at our weekly chart, you can see that we have had this oscillation between up week and down week over the last 5 or 6 months. As this market came down from about 1180 is right, 1175 is right here, up here is 1191. That was that high that we got. And considering that throughout the whole year starting right here, we really got our high for the year right at the beginning at around 1300. We've seen these series of stair steps in which the market has made in essence, a lower high. Let's get the proper pointer in here, but a lower high, stair steps down to a lower high, stair steps down to a lower high, and now we're stair stepping down again to a lower high. So even with this kind of support that we're seeing in the market, we need a lot more evidence, obviously, to ascertain that we've actually found some sort of a long-term bottom in the market. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.